Hello, Uncle Jim here. Today I want to share with you what I'm doing for this crazy market. Yesterday it was up nearly 1,000 points. Today it's down even more. I believe it's down over the Dow's down over 1,200 points. So I want to talk about, kind of what my plans are, what I think is going to happen next. I mean, are we in a recession? Are we in a bear market? Try to answer some of these questions and hopefully bring a little bit of calm to the storm. So stay with me. I think you're going to enjoy what I have for you today. Okay, I've opened my trusty PowerPoint and I want to first talk about, are we in a recession? Are we in a bear market? Well, we are definitely in a bear market with the NASDAQ. The other indices, it's more like 10%. So we haven't reached that 20% decline to reach a bear market for all the indices. However, the NASDAQ, again, like I mentioned, is definitely in a bear market. Are we in a recession? I kind of think we are. I think we just are beginning a recession. And how long do you think it might last? Well, we've had 11 recessions since 1953, and they've averaged 10.3 months. The shortest being 2 months, I believe, for the 2020 recession, and over 11 months, actually, I think over 22 months for the 2008 recession. So, and I think we're going to be somewhere in between. I do think some of the policies the government is doing is similar to 2008, so it could potentially go through 23 and maybe we'll be out of it by 24. I'm hoping maybe sometime in 23 we're over the recession. And also wanted to mention that you need to understand that, markets kind of look ahead. So with the market doing a major dive currently, it just is showing that we're going to have a recession. Doesn't necessarily mean that the market's going to be down during the recession. And actually, the statistic shows something very different. It's up as much as it's down during the recession. So you can't really think that, oh, the market's going to be down for the next year and a half. It really is more typical for it to be down before the recession starts, kind of like what we're experiencing now. And markets generally 12 months later, they're doing quite well. They're typically, back above what they were, when they had the declines earlier or the previous year, depending on how long the recession was. So, my point to all this is don't panic. Don't start selling everything or changing, what you do. You should make some changes, to take on a little bit less risk and to also be sure you're not putting yourself in harm's way. But don't be selling everything. Don't be getting out of the market because I've been in the market since the early 80s. I went through 87 and I went through a number of different recessions, and every time, it seems like a recession is something that in a way is really healthy because you get low, the market's going to go down, but then when it comes back up, you can really do really well, in that kind of a bull market where you can sell options. On the flip side, if you're selling puts during a bear market, you can really look at selling cover calls and doing really well with your stocks growing. Especially if you're selling puts during the market downturn, you can pick up some good stocks at really cheap prices. Kind of like what Warren Buffett does. He really likes this time, right when you go into a recession and the markets take a big dive. He does most of his buying at the low end, which I believe most investors do at the opposite. So, point being, just don't try to sell everything. Just reduce your risk. Take make healthy choices with what you do. And I'm going to actually go through my planning worksheet for this week and talk about what I've done so far this week and what I'm going to plan to do next week. So let's go ahead and jump into that planning worksheet. But before I do, as always, hit that like button, subscribe. I have a Patreon if you want to see the trades I make, you want to see my spreadsheets. I have a higher level if you want to join us in a meeting every week. We have a Zoom call that we do, and then I also have a Discord that you can join. It is for the higher level, but I do answer questions all the time on my Patreon, in both my Discord and on my Patreon. So take a look. It might be something worthwhile for you. So that being said, let's go ahead and jump into the next section. Okay, I've opened up my planning worksheet, and this is I put this out on Monday, May 2nd, and this is looking out through May 20th, and it covers all my different positions. And I have a lot actually expiring this month. Now, what I typically do is at the top, these are my stock picks that I'm looking at, and I change these every week, but some of them stay. Like Apple, I think has been on the last two spreadsheets that I put out. But these are companies that I'm looking at. The two new ones are Vail and MDC, and they're both good companies. And I currently don't have any positions in them, but I'm keeping track of what happens. And if I can get enough premium, I will take positions in them. But what I do is I go through then and identify any of my positions that are expiring over the next 3 weeks. Now, I've already, the reason this is green here, these were dark yellow because they were all in the money, and I was able to roll all of them. So I was able to roll Intel earlier this week, also Micron and iRobot, and I was able to do over $700 on those three. So I believe that's a little, what, 721, and that's what I did earlier this week. So I was able to roll those three. iRobot I actually did today, earlier today, and I rolled it a little bit farther out, primarily to for it. I was able to lower the strike price. For the others, I pretty much had to keep the same strike prices. Yeah, 70 60, 70 60. I did go a little bit wider on the spread for Intel, but I'm okay with owning Intel. I just didn't want to own it that quickly, so I kept the short strike, which is 50, the same, but I did lower the outer strike, just because since I do plan to potentially own these, I'm a little okay with the wider spread, but I didn't want to reduce how much margin I needed, or actually I didn't want to increase it too much, so I've only increased it, and it's actually three contracts, so I increased it by another 1,500. But to me that was worth it. So not bad for these three. I went ahead and did these, and again they were dark yellow. Actually, I think iRobot was light yellow, but Micron and Intel were both darker yellow, meaning I color code these. So the darker yellow means it's a bigger issue, and lighter yellow, not as much. Now, what's surprising here is I actually have several covered calls that are fairly deep in the money too. So Southern Company, which is typically not much of a mover, has gone through the roof. I guess a lot of people have decided to invest in Southern Company, and I'm probably going to roll these, and I may go like I did with iRobot. I may go a little bit farther out because I currently own these, and I don't really want to give them up. So I may even do something a little crazy and do like a leap to get it so far out where I can also increase the strike price. So right now it's at 67.50. If I can get it up to 72 or 73, which has been more the norm with Southern Company. It's been pretty unusual for it to go through the roof like it has recently. I mean, you can see it went as high as 73, 74. Same thing with Con Edison. I should have seen Con Edison coming, so I got myself in a little pickle with this one. So I'm actually, and that's why it's the dark yellow. You can see I've got a strike of 80, and it's currently $12, almost $13 in the money. So that one I'm also going to look at rolling. I may actually take small losses for that one, that I can, with some of my other sales, I can kind of balance it out because, again, I don't really want to give up my Con Edison. It pays a pretty good dividend, and it's a company stock that I like to own. So again, I'm looking at also rolling it or taking a slight loss in the roll. Maybe if I can keep it under $100 loss, just to roll it out, and where I can continue to get those dividends. And then I also have Coca Cola. Coca Cola is not as deep in the money. I believe it's come down today to around 63. And I know from experience it's real easy to roll Coca Cola, so I can roll it out. I'll probably roll it out 6 months and be able to. I had quite a few of my covered calls for Coca Cola were 60, and now I've increased them. I believe this is one of the last ones that's currently 60, and I'll roll it either to 62.50 or 65. Just having worked with Coke so long, I know that it's probably going to come. It's also gone up quite a bit, but my experience is it usually comes back to the mean, which right now the mean is more like 60 versus 63, 64 like it is currently. Actually, I believe it is. It may be 63 and a half and something or something like that. But I haven't had any Coke assigned in several years. The only time they were assigned, I didn't know what I was doing and I didn't realize I could roll them, and I just kind of let them be assigned, which um, only happened to me one time, and it was one of these instances like recently where Coke kind of went through the roof. Um, so this time, I doubt that would happen. It can never say never, but I'd be surprised. This is Corning. It's near the money. It's still. I think it might have gone below 35 today, so it may be in the money now. I'll have to change that. When I first did this spreadsheet, it was at 36. So when I look today, I should be able to roll Corning even if it goes down to 34 fairly easily. I'm not too worried about it. Apple, I've got 140, 130, so it's fairly out of the money. I believe Apple's gone down to 155, so I pretty much not worried at all with rolling it. I like this 140, 130 range. This is probably the third contract I've done with it, so I'm not too worried about it. I should be able to roll it and make even more money, or let it expire and then create a new position. But and I do believe it's down almost 10 points today, which puts it around 152, 153. So, and then Cisco is, this should probably be yellow. Well, it's 5105, so it's slightly out. It was originally yellow, and I just left in the money. But I believe it's down today. I believe it's 49 something, so it's back in the money. I should probably change that to yellow. I won't do it right now, though. Um, but I've been able to roll Cisco with few problems. So I think I'll be able to roll it again. I doubt I would have an issue, and I'll probably roll it to the same strikes, 50, 40 again. And what I typically do is I like to roll it and I like to stick to the same strike or a little better and earn some fairly good premium like you saw above. If I can get close to 200 for the premium, and I believe these are two contracts, that's what I shoot for. But with the down market and what's going on, I'm willing to take less. And like I said, I may take slight losses in some of these to be able to roll them out of trouble. Now, eBay, I think is probably my biggest problem right now because they came out with bad earnings, kind of like Amazon. And I believe they went way down. I think they're below. They may be below 45 right now. I think they went down 5, so they may be 47, 48. So I may have issues with rolling eBay. But one other thing to keep in mind, when I did this, I was happy with owning eBay at $60 at the time. Of course, when you're in a market correction, you're like, well, I'd rather have it for 50. But at that time, I was okay with 60. So, in a way, I don't really need to be greedy. I'm okay with owning eBay at 60. But if I can get lower, I will. But if I can't, I won't take a big loss on it. I'll let it be assigned and pick it up at 60. I think long term, it's going to come back. But just like Amazon, it got hurt for some of the same reasons. Lumen, right now, I believe it's one of the few. I don't think it went down much today. I think it's at 10 and a half, and I shouldn't have an issue with rolling it either. And I'm okay with owning it because at $11 a share, it pays close to a 9% dividend. And there's been people that have said, well, they're going to lower their dividend, but they have really good coverage for it. I really doubt that they would lower it, and they've not lowered it for quite a while. So, but it could always happen. You just never know. But I've had Lumen for a while. I've been able to roll it, even when February was down quite a bit. So I feel pretty good about it. So for it, I'm probably going to try to roll it. But again, if it's a sign, I'm perfectly fine. I like that 9% dividend. Intel, this is in my Roth account. This Lumen was also in my, well, no, that was in my regular brokerage. The Intel, this is 45.35, and I believe Intel is still around 45. I do think it went up a couple dollars yesterday, and I believe it's still around 45, so it's just barely in the money. So I should be able to roll this and gain some good income from my Roth account. But you can see how many positions I have. I mean, this is what, 15 positions. The next is Ford. I've got it at 16.12. It's dropped is pretty low for I think pretty close to 14, and I don't think it went below 14. But I don't think I'm going to have an issue with rolling this. It's a very small spread, 16.12. Um, and last time I looked, when it was around 14, I was still able to roll it. But I do think Ford will come back. I, I think giving it a little bit more time. What I've seen so far about the new Lightning F-150 truck is people love it. So there's going to be pent up demand till they can get enough chips to produce them left and right. So I still feel pretty good about Ford. So I'm not too worried about that. This HEDG is an ETF, and I've got it. It's a cover call. It's 79. It's way outside the money, so I'll probably let it close. I'll let it just expire because I think it's like 71 right now, or 70, 72.67. But I believe it went down another $2 or $3 today, so it's probably 69. So I should be fairly good with letting that expire, and then I'll write another covered call when there's an up day, when the market's kind of rebounding. So this is what I do. This is how I plan it, and the big difference going forward will be um, where I'm willing to take a little bit less premium. I'm not always going to try to get $200 to $300, and I'm also, any new positions, I'm going to take a little less risk. I've always done 20 deltas or an 80% probability. I'm going to lower that. I'm going to do 15, or I may even go lower depending on what it is. And then if some stocks go way low because of correction, then I'm going to pick them up because some of them pay really good dividends, kind of like I was talking about with Lumen. But Western Union's another one. I think it pays 5.5% at its current price. And if I can get it a little lower, I might be able to even get Western Union where it's paying 6%. And that's just two examples. There's plenty others. So this is kind of what I'm doing, and I'm to be sure you don't get a sign without being aware, or you don't get yourself in a mess. Then these are some of the ways that I handle it. And in the instances where I have to take a loss, I will, because hopefully I can balance out premium in other places to be able to take a loss if I have to close a position. So that's it. I hope you enjoyed this. If you have any comments, please add a comment below. Especially, I'd love to hear, some of your positions that are deep in the money and what you're doing. So again, I hope everyone is staying safe. Hope everyone's staying calm. I know it's trying times with these crazy markets, but hopefully things will hopefully we'll get another bounce. Hopefully we're near the low. I keeping my fingers crossed. So thank you for joining me, and have a wonderful day.